Hello guys, welcome back to a new video. Today I'm going to share with you 3 filters that saved me hundreds and hundreds and hundreds of losses over the past months. I trust these filters with my life, and there are only 3 of them, and without them I don't have an edge in the market. My strategy is not profitable if I don't apply these 3 filters on a daily basis on each setup I have. And the beautiful thing is that you can use them on whatever strategy you're using right now. So this is not exclusive to a certain style of trading. And after watching this video and understanding these filters, I want you to go to your trades, apply these filters, right? Winners and losers, apply these filters and see if your profit goes up or goes down, if your win rate increased or decreased. All right? I want you to see for yourself. Now let's not waste any more time. Click that like button and let's get started with the first filter. All right? So if you have a trend following strategy, and I believe that's the case for, 80% of traders out there, they like to trade with the trend. So if the trend is your friend, then the first filter is going to help you a lot. All right? So basically, a trend following strategy is identifying a trend first, obviously, and then you're looking for continuations. All right? You're basically looking for continuations with this trend. I don't support the idea of identifying the reversal point here. So this is a downtrend, and then identifying the reverse point here, and maybe you can get it right and take a trade from here, here, and you take profit here, and then you stop. So that's it. I'm more into the idea of waiting for that reversal point to get confirmed, because it's not easy to call the reversal. All right, you'll get caught a lot of times. So wait for that reversal point to happen. And this is not the filter, all right, this is just giving you the context. And then start looking for continuations. This is the easiest way to trade a trend. All right, trend following strategy, not a reversal strategy, because this is not a trend following strategy. Basically, you're reversing. This was the trend and you're trying to reverse the market. So this is a trend following strategy, waiting for a trend to get confirmed and looking for continuations. But what happens is that a lot of time the trend is here, it was already established, and when you try to continue with it, this happens. All right, I know that this happens frequently to you, and now you are disappointed and you don't understand why the trend didn't just continue like it did here. One of the reasons, all right, I'm not saying that this is 90% of the times, but this happens a lot. But when you combine this filter with the other filters, you're gonna have a really good success rate. The first filter is like this. Price, all right, tends to, when it takes a high or a low, it tends to have a reaction. That reaction, so suppose that this is a previous low, price was trading here. When it takes it, there's likely to be a reaction. A reaction can be consolidation, it can be rejecting, right? It can be a reversal. So you're rejecting and then continuing. It can be a reversal. But a lot of times, and this happens a lot, all right, when price takes a certain high or a certain low, it will make a reaction. Now we're going to use this filter on the higher time frame alone, all right, only on the higher time frame. So for example, if we see here, price was trading to the upside here, and once it took this, high, you can see we have a reaction from here. The next candle, traded to the downside, and then it continue. We have here price stopped, it consolidated a bit, and then we have a rejection. All right, let me give you another example. We have another one here. You can see once price takes this high right here, and we're only looking for the higher time frame. All right, I'm gonna show you why. So whenever price takes a high or a low, we're gonna have a kind of a reaction. Sometimes it will just rip through that high or that low. For example, also here you can see that once we take it here, we take this, and then price stopped. It gave this small rejection from here, and then it continued. All right, this happens a lot. So if you're looking at the lower time frame and there is a beautiful trend like this, and you're looking to continue the trend, first of all, check the higher time frame. Did we just take a higher time frame high? On that higher time frame of yours, it can be whatever. For me, it is the 1 hour. If price took a high recently, so you're just around that level, you don't take the trade. All right, there's a good chance that we're gonna have a reaction. It can be a consolidation, it can be a rejection, and your stop loss gonna get hit. All right, this one alone saved me hundreds of losses. All right, you can't imagine how many losses I avoided using this. Of course, some trades turned out to be winner, but I would say 70% of them it failed. You're continuing the trend, go and check the higher time frame. If you want to continue the trend from here, all right, and this is still the high to take, this is a perfect setup. You actually have a target, but once we reach this, you don't take the trade. All right, you simply don't take it. Go to your hard time frame and then try to spot this pattern right here. All right, I'm 100% sure that you're gonna find it in some losers, and you can go back to your chart and you will see a lot of times whenever price takes a high, it have a reaction. Sometimes, for example here, you will see that price just ripped through it, but this is a higher time frame candle. So if for me, I'm trading on the 15-second, right? On the 1 hour, it doesn't look like we have a reaction at all, but on the 15-second, you can have something like this. Price is trading, this candle is trading to the downside. You can have a reaction, so a rejection, and then continuing at the same candle. When you look at it at the higher time frame, it is just a simple candle that ripped through this low. But on the 15-second, we actually have a reaction from it, and my stop loss would get hit and then continuing normally, right? And guys, I can go forever and I can find examples. Here's another example. We rejected from here. All right, here's another example. We took this high or this low, and look at this candle, rejected and then continue to the downside. Another example here. All right, here's another example. We took this high and look what happened. Price just stopped. We have the first reaction from here, the second reaction from here. I hope you can see it. It doesn't look like much, but again, this is your higher time frame, right? From here, this is a violent reaction on the lower time frame. This happens a lot of times, and if you start noticing this, you will avoid a lot of losses. All right, so this was the first filter basically, and I believe that you can apply it to any strategy. I don't think this is specific to anything, so whatever strategy you're using, I believe that some market structure is essential to it. All right, so again, I can go back forever and show you this filter, and it is just amazing how frequent it is. All right, so this is the first filter, and now let's move on to the second filter. I believe that you can see the second filter here on the chart. It is quite obvious. I usually I shared a video, I don't know, 9 months ago. I actually had 8 filters or 7 filters, I believe. Yeah, 7. And too many, I know. And now we are down to only 3. All right. And I believe that this is the natural flow of things in trading. Your system will become simpler the more you learn about yourself, about the market, about price action in general. Your strategy will become simpler and simpler. So if you are overcomplicating things, the more you progress into your journey, you're going in the wrong way. So the second filter is the EMA rejection. All right, this one is a bit tricky because you're gonna have to find the one that fits your higher time frame. And again, this on the higher time frame. These filters are on the higher time frame, not in the lower time frame. For me, on the 1 hour, I found that from the data that I have, the 100 is the best one, and it doesn't have to be a long process of finding the best one. Just use an initial one and see how things work out for you. If not, try another one, whatever. I don't know, put 3 of them and see which one is gonna apply to this filter. All right, this filter, the logic of it like this, and I believe I already explained it in one of my previous videos, but again, if you're following a strategy or you're following the trend and you want to take a setup, maybe from here, all right, I want you first, before you click that buy button, I want you to check the higher time frame and see if price is touching the EMA. If price is touching the EMA or the EMA touching price, I want you to completely disregard this idea. I'm not talking about theories here. This is actual data. And if you just look at the chart, price taps the EMA here, we have a reaction. Just like the 1 hour, just like the previous filter, we are talking about reactions. I'm not talking about huge rejections like this. It can be just a simple reaction. You can see here, we have a reaction from here, right? A rejection. We have another rejection from here, another rejection from here. It doesn't seem like this is a rejection, but you can see that the price actually stopped. We have a pullback from here, and this can stop you out in the lower time frame. And we have another rejection from here. You can see this is not hindsight, all right? We are basically looking at the data. We have a rejection from here. Here we don't have like a big rejection, so I wouldn't say this is a rejection, but most of the times when price taps the EMA, you're gonna have something. Price will stop. It will have some kind of a reaction from it. Here you can see also. Here also it stopped. Here you can see this swing to the upside. It's huge on the lower time frame. Remember that this is your higher time frame. Here it happens all the time, guys. It is in front of you, all right? All the time. Even here you can see that price ripped through it here, but look at this. We have this small from this high to this low. This is huge, all right? In your lower time frame, this is huge. Again, we can go back forever and I can show you thousands of examples, but I want you to go pull your losers and apply these filters, and you're gonna see how powerful they are. All right, so that's the second filter. If you're following the trend, if you're taking trades with the trend, before you take that setup, all right, go back to your higher time frame and see if the EMA is close. For me, my rule is when price taps into that EMA. If I'm still have, suppose that this is the EMA and price is here and I want to take this setup, this pullback, I want to buy from here, this is actually a good setup for me, all right? Because I know that you're gonna likely to trade to the EMA. We always do that, all right? We don't run from it, we trade in that direction. So I'm still have a little room here to take my trade, all right? But once we taps into it, I don't take the trade, simply. Now, a lot of time, this is aligned with structure. So for example, here you can see this reaction. So this is not just following a trading indicator blindly. For example, you can see that this reaction happened from an imbalance. This reaction also happened from an imbalance here, right? I don't know, from here also imbalance. We have this zone here also. All the time here this is beautifully also aligned with this. So this is the first filter and the second filter, both telling you do not take anything here unless you let the storm passes. So they are working together here. And again, the EMA top is most of the times it is aligned with structure, but instead of trying, after you prove that it is most of the time aligned with structure, instead of trying to understand structure every single time and trying to identify points of rejection, just look at the EMA. This is way simpler, right? You're gonna make it easy for yourself. So that's the second filter. The third filter is something that I also talked about it, all right? And it is the concept of open, high, low, and close, and open, low, high, and close. So basically, each candle will have this, all right? I believe you already know this. It will have an open. If we are bullish, okay, it's gonna print the low, trade to the upside, print the high, and then trade to the downside and close. And you're gonna have this pattern right here, something like this. All right, this is an ugly candle, but you get the idea. This is the open. We print the low of the candle, so that's the wick that you see here. All right, and then we trade to the upside to print the high, you can see, and then we retrace back a bit to close, and we have this candle. All right, let me keep it. So what is the logic here, and how do we use this concept as a filter for my or for your trades? Well, first thing, if you're buying, all right, you're looking for buys, you don't want to buy before printing this low. All right, you don't want to buy in these areas. So you are expecting the next candle to be bullish. Again, this is on your higher time frame. You are expecting it to be bullish. So if you go back to your higher time frame and you see that there is no wick here, it just opened here and started trading to the upside, you simply don't take the trade. And this is basically happens most of the time. It happens on the first 5 minutes, right? So on the first 5 minutes or the first 10 minutes, just make sure that there is actually a wick to the downside before you take the long like this, all right? Otherwise, you can easily be liquidated to the downside to create that low, all right? And then continuing, so you don't be on the wrong side of the market. That's the first filter. So this can be divided into two, this filter. The second one is also you don't want to buy here when the candle is about to close. So at the last 5 minutes, all right, and you're basically trying to buy from here, and there is 5 minutes for the close. That means that we're gonna have to retrace to close. We don't close at the high, at the all-time high. It's gonna have to trade to the downside and close here. We printed the high and then we retrace the bit to close the candle. So you don't want to buy at the last minutes of the candle. Now this depends on the higher time frame. If the higher time frame is the daily or the 4 hour, maybe it can be the last 15 minutes when we have that retracement to close. For me, on the 1 hour, I use the last 5 minutes. So you're gonna have to find this by yourself, but avoid continuing the trend and your higher time frame candle is about to close. Now, one thing you can do, or let me just finish this before that. Also, you don't want to buy from here at the last few minutes, because if you're looking to continue the trend and you're looking that the next candle is going to be also bullish, remember that the next candle, when it opens, it needs to put the low first and then trade to the upside. And now you're going to have to put a wide stop loss, otherwise your stop loss is going to get hit. So you have two price action patterns that's going to work against you: the retracement of the candle to close and price printing the low here to start a new bullish candle. Now, there is an indicator for this. I don't use it. I only have one candle basically to look at this, so the 1 hour, but this is a really good indicator in my opinion, and it's called the higher time frame power of 3. So let me add it, and excuse me. Okay, beautiful. So you can see, let's go to the 5 minute maybe. All right, beautiful. This is on the 5 minute, and this is the daily candle. Let's go to the 1 hour candle actually. So I want to see the 5 minute time frame, and I want to see also what the 1 hour is doing. So what I can do is I can do this, go to the 1 hour here. Beautiful. Okay, maybe this is not the best example we have, but let's zoom in and see it. So what happens is we are printing a down close candle, right? A red candle. But before that, look what happened. We opened here and we put the high first. So we traded to the upside first. Again, this is not the cleanest example, but it is what it is. We printed the high first and then we started trading to the downside. All right. Let me find something better maybe. Let's go to the 1 hour and use the daily here. All right, I believe this is, yeah, this is really good. So imagine that you're buying from here. Imagine that this is a stop run. Beautiful. We were pulling back. Overall, we are bullish. All right. And we have a stop run here, and you want to take the buys, and you want to buy from here. There is setup inside here, but the daily candle is about to open, and when it opened, look what happened. We traded first to the downside. So from here alone and the overall context, we are already expecting a bullish candle, continuation to the upside, right? I believe we can all agree on that. Whatever strategy you are using, I don't believe that you're expecting a reversal from here, all right? Especially that we still have some highs here. So we're expecting the continuation of the trend, and we traded the downside, and this is a really good pattern, price signature. When that candle opens and it takes some kind of a low, this is really beautiful, guys. This is the kind of setups that you want to take to get those big expansions. So we created the low here. So again, you don't want to buy from here, you want to wait and see what the next candle want to do. And most of the times you won't miss the setup, all right? That candle, when it opens, it will give you an opportunity to enter, and this could be your best entry from here, the most optimal entry. And this happened just today, guys. All right, this filter I use a lot, and whenever I have a setup, I go back to my higher time frame, I check for these three, and it takes me about 10 seconds to recognize a hit on one of these three filters. All right, because when you use them a lot, you don't have to think that much. So we still have 20 hours for this candle to close, so you have So you have a lot of room to keep buying from here, right? You don't have to think about that retracement to close. But again, since this is a daily candle, there's a lot of time. We are still at that window to create a low, so we can easily come back to trade to the downside and create a low and then trade to the upside. All right, so this is relative to the candle that you are using. And now I believe that this is the end of this video. These are my 3 filters that I use on a daily basis, and without them I don't have an edge in the market. I have my strategy and I have these filters. All right, without them I'm gonna lose money constantly. I want you to go and see for yourself, apply them to your previous trades, or apply them or notice them, observe them tomorrow when the market opens, and see for yourself. Now, if you have any other questions, you can always DM me in my Twitter account or leave a comment down below and I'll answer you as soon as I can. Now, happy trading and good luck.